Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, July the 3rd. So we had another crazy day today, straight up, straight up, straight up to the moon. New all-time highs in the, I was going to say across the board, but it was in the S&P and the NASDAQ both. Not so much in the Dow or the Russell, but as you can see here, this is a daily chart. We're just straight up, straight up, straight up, new all-time high. This is the ES. And here's the NASDAQ, straight up, straight up, straight up, new all-time high. And here's the Russell, down, 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 down. Not what you would think, but that is also, I guess, not completely abnormal for the Russell to be going the other way. Now, of course, I'm searching high and low the last couple days. I'm just not seeing, see if I can get in here. I'm not seeing, there's not a lot of momentum. Today here, the ticks, there's 0. So the highest we got, we had one plus 900, but most of them were under 750. And down here on the downside, 400, 300, something like that. So basically, not a lot of momentum here, but a lot of momentum here, right? It's been like that way the last couple of days. I'm watching advanced decline, and there was, for the most part, the advanced decline was very heavy, which, again, did not bode well for a just rip, 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 higher, 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 but that's what we got. Kind of unusual. But anyway, today is the market is closed. The market closed at 1 o'clock Eastern today. We do have, actually, shortly, we've got Fed FOMC minutes will be released. Obviously, the market's closed, so probably not much is going to come from that, I don't think. On Friday, we have payrolls coming up. I suspect they'll be in line, and everything will, just kind of keep going. Obviously, this is a bullish market, and we want to play it to the upside. But I'm a very cautious bull because we are starting once again to get extended. Doesn't mean we'll pull back, and it certainly doesn't mean we're going to crash and burn and all that kind of stuff. But we have to kind of be on our toes. Now, let me move this over here, and I want to tell you what to watch out for. So again, Friday we've got payrolls. Next Thursday we've got CPI, big inflation data point. Friday we've got PPI, and then we've got Fed meeting on the 31st. Then we've got earnings kicking off this week of the 15th. So a lot's coming up, and I think with CPI and PPI, those numbers are going to come in kind of in line the way they've done the last couple of months. Now, it should not be anything surprising or extreme or anything like that, and that should bode well for more upside, I would think. Again, unless we get some kind of real shock number, which I just don't really see that happening. But keep an eye on that, and then of course we get into earnings season, and anything can happen there. But I don't think that we are going to see anything crazy out of the ordinary across the board either. But let's look at the ES here. So this is today. Let's go back to a 10-day chart, and as you can see, we were chopping between, this is a voodoo skyline, voodoo snowline, kind of back and forth, heavy, 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 and then all of a sudden we rip up here, tag this, and fail all the way back down here, and heavy, heavy break through it, heavy, heavy, heavy break through it. So, where's the next, when you're under a major level of support like that, you typically hit that and get rejected and go back this way. But instead, we just rip, 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 rip right through that and keep going to a new all-time high, which, I always say it feels like algo's gone wild, with us sometimes, that when things just don't really add up. Same way, this is the ES on a 10-day chart, same thing on the NASDAQ. Maybe even a little bit more on the NASDAQ here because of Tesla. I guess you guys probably saw Tesla. Go, 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 straight up, straight up, straight up, straight up. And I mean, the thing's just been on fire. It's been crazy. So again, we want to remain on the bullish side, but realistically, to be cautious because, of course, we could get a weak data point or a hot number or something like that at any point, and then this thing could get a pretty sharp pullback. But let's look and see what that might mean on the charts. So on the ES here, let's go 20-day chart. And as you can see, here is where we were chopping between skyline, snow line, chop, 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 chop. Now we are now on the upper end of it, so that typically bodes well for support, higher prices like that. We'll see. And we'll go out here to a 1-year chart, and again, it's just the sky's the limit. And the crazy thing, because I'm a math guy, 4,100 to 5,100 to 5,600. That's a 1-year chart. So last November, we've moved up 1,500 points, in 8 months, 9 months, whatever. That's a long way. And all of that is pretty much based on we're going to get a rate cut, 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 right? That's even today. I'm always looking for the news on the market. What's driving the market today? And it's hopes of rate cut. I wish I had a nickel for every time I saw hopes of rate cut, that kind of thing. Just that's more of an interesting kind of tidbit than anything else, but it also makes me nervous that what if we start getting some bad data points, and then the possibility of a rate hike were to come in there, or right now it was going to be a March rate cut, and then it was going to be June, and now it's going to be September, and now they're even saying December. September is 66%. The July meeting is an 8% chance of a rate cut, 66 here. I think out to December it's a long way out, but I think it's like 46% or something. So everybody's banking on September. They were banking on earlier this year. They were banking on last year. Remember, we were going to get 3 rate cuts last year, and of course that didn't happen. And they're, the Fed's watching data points and all that kind of stuff. So it can happen. Just beware of if we don't get one, what that could do to us on the downside. So again, I'm a cautious bull. You have to be a cautious bull in this market, and we keep trading it up until we get some data points that say otherwise. But there's the ES. Here is the NASDAQ. You can see the same thing, up, up, and away. And then the rut, not so much, sideways here. Now I think the rut will tick up once we get into earnings season and we start having some small caps reporting and all that kind of stuff. I think this should do much better. And then lastly, we've got the diamonds, or the Dow. And again, not so much going on right here. Again, I think as we get closer to rate cuts, you've got a lot of financials and industrials and things like that in the Dow. Should do better. So I'm actually liking the idea of getting long the Dow. I'm already a little bit long the IWM. Probably going to try to get a little bit longer there. But other than that, looking at a lot of different names, but until we get, so we'll go through Friday, tomorrow's a holiday, go through Friday, see what happens with payrolls, and then get into next week and we get CPI and PPI. Not a lot to do, but kind of sit and watch and wait. There's some kind of cherry picking, honey badger kind of stocks, but for the most part, probably want to be a little more cautious into next Thursday and Friday. So with that, let me wind it up. Hope that helps. Hope it makes sense. You guys have a fantastic 4th of July. Hope you enjoy spending time with family and friends. Be safe. Have a good holiday, and I'll see you guys at the next update. Thanks. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me